Hello and welcome everyone to the live Q&A. Good afternoon. My name is Danny. I will give you the webinar today. Before we will begin, I want us to go through a quick sound check. So please use the question section to comment that the sound is okay on your end. And obviously that you can see the screen here, the chart here with the screen here with the chart. Okay, and like I said, this is a live Q&A webinar. We're going to go through the presentation here and understand how the webinar will happen in every step, what we're going to do. Okay, so initially we'll have the previous questions. Those are questions that our team has prepared from other webinars and from these previous webinars. Okay, which are those questions right here. We also have the dynamic questions, which is the true nature of the webinar. As I said, this is a live questions and answers webinar, which means that you guys can ask whatever you want along the way, regardless of the topic that I'm teaching. And we have here, this is a little more informative layer. Okay, this is where I'm going to send you some links to save you the trouble to look for them on the website. And lastly, we have analysis. So analysis, you guys know the drill. If we're not going to go through analysis with our questions, so perhaps we can play with the layer that we have here with some examples for technical and fundamental analysis. Now, it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, even if I went through several things and you couldn't understand it on the first or on the second time, it's fine because the webinar is recorded and you can just review it on our channel later on. Okay, this whole webinar is recorded, so you can just access our YouTube channel and see the webinar whenever you need. Okay, so I'm gonna go for a few moments just to make sure that everything is recorded and then we will begin. Thank you very much. All right. So everything seems in place, and like I said, I think we are going to begin with the previous questions as it is with the linear order that they are lined in with. Okay, this is, by the way, just on a nutshell, this is the AvaTrade. To access this platform, you don't have to download or install anything. Okay, let me write it down for you, the AvaTrade. Okay, it's also in the app. You can find it in the app on your mobile. This may be the desktop version, but the app looks very much the same. It has some similar, some unique features that I'm going to show you today. Usually it goes like this by default, but even if you lost your way across the website, you can just click here on the AvaTrade, trade with confidence, and it's going to bring you right back to here. Okay, so let's read the questions and understand what we have today. Just a second, I want to make sure that everything here is okay. All right, so what is a reasonable, no, this should be a little different, risk, reward. Okay, risk, reward. R&R, risk, reward. Ratio to work with. Okay, we'll understand what that means in a moment. Can I get a mentor who will help me, who can help me to trade? Okay, how does fundamental analysis affect the market? Oh, that's also fine. How many assets should I trade at? Should I trade at the same time? That's also okay. And can I trade without leverage? All right. Okay. To be honest, in this case, I think what might be good to do is to actually, we're going to begin with the first one. We're going to begin with the first one, even though it will require us to do some preliminary explanation, but I think it should be fine. So what we're going to do, we're going to do some steps on the chart to understand how to enjoy this interface to its full extent, because right now it seems like the chart is occupying all the way up. So what we're going to do, the first thing is we're going to click here on the two tiny arrows pointing on themselves, okay, which folds down the chart. Above we have those nice lists with categories. As you can see, Forex, indices, cryptos, commodities, and stocks. Okay, now once we choose our asset, let's suppose we're going to stay with this for now for the sake of the discussion. Okay, and then we can bring it back here. And then if I click sell or buy, it's going to open me I'll have the ability to choose the quantities and some other things here underneath. Okay, so this is what it does. And one more thing I would like to do is to change my crosshair from no crosshair to crosshair. And what that does is it actually allows me to pull information from the candles. Because as you can see presently, when I'm going through the candles, nothing happens, right? There is no information. But if I'll change it from this to that, then suddenly I have the squarey thing that shows me what the candles are. Okay, now a quick guide through. Okay, in here we have the search bar. I can just put here whatever asset I want. Let's go with Apple, just as an example, and I can pick it from the list. If I go to the right, here we have the time frames. Here we can change it from candlesticks to line. Okay, and here we already saw that. Here I can split the screen. Here we have some indicators. Perhaps we're going to use that. And in here, there is a nice inventory with all kind of things. Okay, here you have an oval if you want to remember to capture a certain time frame and so on. Maybe a timeline between certain times, between certain levels. Okay. Ignore the fact that I'm doing it swiftly. Obviously, you can do it in your own pace. I can also modify whatever I want by clicking on it and simply changing its numbers, and then it's going to jump straight to the number that I've placed. Okay, we can see it for some reason. Oh, it's a little higher than that. We scroll down. There you go. You see, if I want it to be on 200, just going to click it and type here 200, and it jumps down. Okay. All right, I think that's quite enough. Now we can finally deal with the question itself. So we're going to take it this way and we're going to paste it down here. Oh, we already done that. Beautiful. What is a reasonable risk-reward ratio to work with? Who can tell me what is a reasonable risk-reward ratio to work with? First of all, what exactly does that mean, risk and reward? What is the reward and what is the risk? Anybody? Exactly. Thank you, James. Reward is the profit, and risk. Reward is obviously when my reward is to make money, right? But risk, what will be the risk? Nobody has any idea. Guys. Exposure. Okay, we're getting somewhere. Freddie, you said exposure, but what does it mean, the risk? The stop loss. Okay. All right. Well, it's fine. Let's go through that and break it down to understand. So the reward is profits. The risk is losses, right? It's quite self-explanatory. Now, what we're going to do, because Apple, unfortunately, is a US market stock, and we're not having the US market stock now because the market is only going to open in a few hours, we have to choose something that is open. Let's go with wheat. How is wheat looking? Not so well. Okay, we're gonna stay with that. It doesn't really make too much difference. Let's go for a buy. Actually, let's go for a sell. It does seem a little bearish, right? It seems like it's taking a hit. Okay, and we are gonna see our risk reward. So to understand my risk reward, I'm gonna use two things that are pending orders. One of them is called take profit. The other one is stop loss. Okay, so take profit and stop loss. What they do when they reach a certain level, okay, if I click here on the take profit, obviously when I'm selling something, just to clarify something, guys, okay, when I'm selling, my intention is the value will decrease, and when I'm buying, I want the value to increase. Now if I sell and I want the value to decrease, this pending order that actually triggers by reaching the price is going to close my position with the profit. And this is why it's called take profit. I'm going to close my position and take my profit, right? It's not going to take my profit, it's going to give me my profit, but never mind. Now, stop loss will be the other way around. So stop loss will be a point that I'm asking the platform to remember. to close my position and cut my losses because I don't want it to go any farther to the loss area. Okay, so let's suppose that everything that is above this price is loss only when I'm selling, right? So everything above is what I lost, what I lose. Everything down is what I make profit. Okay, that sounds very well. Now, how can I measure exactly what can be the outcome if it goes against me? How can I know how much can I lose or how much can I gain? Which basically answers the question that we have here, right? Risk reward. This is my stop loss. This is my risk. My risk is measured by how far away my stop loss is from my entry. So we're gonna go for the basics, the most basic form, the most basic lot size possible, which is 0.01. And we're gonna see what happens if we're gonna go for $10 down, okay? So for that, what I'm gonna do is I'm gonna look at the current price, and the current price is 580.5, okay? So what we're gonna do is we're gonna adjust it to 580, okay, 0.5, which is current price, and I'm just gonna decrease the value by 10. Oh, sorry, we are selling. My bad, guys. We're gonna increase it by 10. Remember, when I'm selling, I want the asset to decrease. So this is where my take profit should be. This is where. So I'm gonna increase, I'm gonna decrease, right? We said when we're selling, we wanted to decrease. So $10 down, giving me $10, $10 up, God forbid, I can lose $10. Okay, what is this ratio here? What is this ratio? So we have, let's jot it down, okay, just to understand. So take profit 1075, stop loss 925. Okay, I'll be honest and say that this should be exact, but there is something called spread, and the spread is a tiny commission that we're taking in each and every position, which is basically the tiny difference between the bid and the ask, or the buy and the sell. Now this comparison is 1-to-1 ratio. Okay, you don't have to be it's not really difficult to understand here. Okay, 1075 to 925, maybe a little less than 1-to-1, but it's definitely not 1-to-2 or anything like that. Maybe 1 to 0.11, but never mind. Let's not delay on that. Now, how do I change the ratio though? First of all, do we have any questions till this point? Any questions about anything that I've explained? No questions. Excellent. Excellent. All right. In this case, we can carry on. Just a second, guys. Okay. So as we understand, we have here risk reward 1-to-1. It's not bad, it's not good, it's just 1-to-1. How do I adjust my reward to 1-to-2 as an example, right? 1-to-2. How does that work exactly? So if we set a $10 down, giving me $10, and $10 up, I can lose $10. What happens if I increase that, I decrease that to 60? What is my ratio now? My ratio now is 1-to-2. That means that I can gain 20 and I can lose, God forbid, 10. So that's 1-to-2. Now, I'm not going to answer the question here with definitive answer to tell you the reasonable, maybe reasonable, I can say, the recommended, I'm not going to tell you that. I can just say that in most cases, I'm not going to say that. Everybody has their own ratio, but look at what makes sense to you. Let me ask you a question. Does this, let's take it to the extreme here. Obviously, I just want to show you an example, but I hope that it would make sense. Let's increase also the quantities that we're taking. So what I did, guys, is I just increased the value by a little bit, okay? So from 580 to 650, that's $70 away. It's not 10 anymore. Let me just show you that. 650, that's somewhere here, okay, and 560 is here. You see that it's messing around with me. It doesn't. Oh, It does. You see, it's scared from my. Okay. It doesn't let me land it on 560. So what I'm gonna do, I'm just gonna place it here. It doesn't really make any difference. I'm gonna click it and I'm gonna simply change it manually here. And because this is my take profit, we're gonna make it green. And this is my stop loss, and we're gonna make it red. There's really no need to do that, but it just helps to remember. Okay. This happens to be exactly on the resistance line. Okay, whatever. So in this case, what happens is, you see, this is more. This is way more than before, and the ratio here is approximately 1 to 3, right? Why is that 1 to 3? It's 20. Possible profit is 20. Possible loss is 69. Right? So what does that mean? Let me just show you that. Hold on. It's just a nice exercise. Sorry. To know, oops. To know what is the ratio. So that's 1 to 3. 1 to 3, 3 to be exact. I'm not going to tell you if it's good or not. I'm just going to ask you a question. Does it make sense? Oh, let me maybe also increase that a little bit just to have a little more action on this position. So now it's a little higher than that, right? We had 1 unit, $20 down, $70 up. That results exactly what it is. Now we're going to increase by 10, so that will be the result times 10. So $20 up will be 200, $70 up makes it 700. In this position, my potential profit is 200, my potential loss 700. Does this look reasonable to anyone? Okay, all right, that's good. So we can carry on with ease. I guess that this question is pretty good. Okay, it helps me understand my proportions, how much I can gain, how much I can lose, which, by the way, even if you're not using the platform, the web trader, and you want to still be able to know that without the platform to calculate it by itself, because that's what happened here, right? We've placed the numbers and the platform is showing us, but if I'm an MT4 trader or MT5 trader, I'm not going to be able to have that, okay, unless afterwards I can see backward what happened. But there is a nice way to do that, and this nice way is formula. Okay, and this nice equation that I'm going to give you, this formula, is very, very simple. So we're going to look at summary divided by movements equals units, and that's the result. In other words, actually in this case, it's the other way around. So this also fine, this also fine. Okay, lot size. But what I wanted to show you is units times movements equals summary, which is potential profit, just a second, potential profit or loss. Okay, and this way you can know. So if you're going to take one lot and it goes up $10, you're going to make, oh, this is 20. Okay, let's make it 10. Sorry. Okay, so if I have 100 units, one lot I have 100 units, and it goes up again, it goes down for me $10, I'm gonna make $1,000. If it goes, God forbid, it goes against me $70, I'm gonna lose $7,000. That's how the multiplier works. Okay, very nice, very nice. Okay, do we have any questions about this question or anything else? Guys, remember, this is a live Q&A webinar. This is your chance to ask me a question and see the answer on the screen. Okay, can be very, very good, very, very educational. Now we're going to carry on with ease. I think this is pretty much concluding our, maybe I should paste it down as well. Yeah, I think I'm going to put it underneath. Okay, just a second. We're gonna, maybe I should have just taken this part. Okay. So, okay, but what I actually wanted to also add here is risk reward ratio is determined by potential profit or loss, which can be calculated by the following equation, right? Which is this one. Okay, pretty much looks pretty much okay. Can I get a mentor? Guys, this become very frequent, okay? So we do have a mentor. It's not really a mentor, it's an individual called a senior account manager. Okay. And the senior account manager that we hire are also traders for themselves. So they have the ability to simply assist you with your trading. They're not going to tell you what to do. They're not going to tell you specifically how to do, but they can definitely give you the surroundings in terms of a plan, a strategy, the exercise that we're doing now, which is calculating the potential profit or loss, also risk money management, margin comparison, and so much more. So a senior account manager can be assigned as soon as you've made a deposit and you start moving. Use this benefit. Okay, we're gonna just make it a little smaller. Okay. How does fundamental analysis affect the market? Okay, that's an interesting question. So how does it happen, guys? And why should I bother analyzing fundamentals? Why can't I just look at the chart here and say, because I have a bunch of maybe 5 candles down, excluding this guy, so I think it can potentially go down here. Why can't I just do that? Okay, so let me show you. What I did, guys, is I've opened gold and I've changed the time frames from, what was it, weeks, I think, to months. And I want to show you that in particular dates, let's go back to weeks, I guess, might be also fine. You see this thing over here, this 2 bullish and bearish candles, which are almost the same size as I recon. Maybe I'm wrong. Just looking visibly on this. And we have also the reversed head and shoulders here. We have a nice head and both lovely shoulders. Just gonna capture this with a rectangle, get rid of the background and make it be turquoise. Why not? Okay, so those particular cases, guys, are, will it let us do that? Yes, with no issues. Okay, those 2 cases can be easily a result of something fundamental. The interest rate, a war. Okay, but now you're going to ask me, Danny, how the hell gold, which is based on supply and demand, is affected by economy decisions? And I'm going to tell you back. There are certain things. Who know what is a safe haven exactly? Safe haven, guys, is where there is uncertainty in the market. Uncertainty could be a nice interpretation of extreme interest rate decision. Not even extreme. It doesn't need to be extreme. It just needs to be to create. There is also an instrument called VIX, right? The fear factor. how uncertain the market is. So all those things accumulates into the market and into the charts and down to the numbers to our positions. Now, how does that happen exactly? Let's get. I don't want to. You know what? Let's keep it for now. Let's keep it for now. It doesn't really cause any damage. What I want to do is I'm gonna go to the news and we're gonna go through interesting things here to try and find. During issue trading market, no, we don't have time for that now. Let's just go with something simple, okay? Let's go to the economic calendar because to find something here that will contribute to us presently might not be an easy task. Well, I think that pops because we searched it yesterday, but yeah, it's pretty convenient. Okay, let's go with the NFP, okay? With the non-farming payroll. Okay. Now, I'm not gonna read the whole thing, but I'm just gonna tell you something very simple regarding the NFP. The NFP is, well, basically it's all the new jobs added last month beside the agriculture jobs. Farmers, agricultures, all of those are excluded. This is why it's called the non-farming payroll, and that indicates quite well how the economy is driven. Why? Because think about, you see the amount that is, just a second, I want to see, oh, this is the previous, okay. So that means 200,016 jobs, okay. 216,000 jobs, yes, exactly. This is what happened last month. Now, what does that mean? That means that all these new jobs was created. That means that all those people are paying taxes, working, driving the economy, using the currencies. Okay, is that good for the economy or not? Well, we can think this is excellent, right? 216,000 jobs. Okay, but let's look at the other results. Just a second. It's February. Where's December? Oh, there we go. This is January. Okay, this is last month. So, oh, this is this month. I'm sorry. So as you can see, that's actually positive. That's actually positive. Okay, so I'm just going to give you a quick brief about how to read the economic calendar. So this is the last result. This is why it's called previous. Forecast is what we anticipate that will happen. It's not guaranteed at all. As you can see, it's really different than what we expected. It's actually higher. Okay. Actual, this is what we happen, and that's why it appears naturally on the next one on its previous, right? If the next result will be 250 as an example, right? So it will appear on the next one as its previous. So we'll have on March, the previous will appear as 250. Okay, every time you see 150, that became the next one, 199. This was revised from 173, and in here 216. What happened last month? Now, how can we? In which way we can know if it's gonna go affected positively or negatively? Because again, when I'm looking at this number, it looks pretty good to me. 216,000 jobs. That's amazing for the economy. It's very good. But we are comparing it to what we expect. So in this case, which amazingly this is in percentages, I guess that's maybe 20% more, right? I'm doing it in my head, but I would say roughly a little more than that. 30%, right? A little more than that. Anyway, the point is, if this number is higher than this number, that means that this is a positive movement, right? This is what we expect, 150, and 216 is what we've got, which is amazing. Now, what does that mean in terms of trading. Okay, so we understand more jobs is created. That's very good for the economy. How does that affect my trading? This is which country is that? Which currency is this related to? Which currency, guys? Which currency is this non-farming payroll is related to? Anybody, guys? I'm pointing at you. Excellent, Mohammed. The U.S. So if it's here, if it's the U.S. and we understand that this is something positive, you don't need to be a genius. You just need to look at what happened last time and what actually happened. So we understand this is positive. And if this is positive, we can understand that the US dollar will be affected positively. We can assume that. If it would have been otherwise, if we would have expected 150 and it would have been 140 or one in a lower number, what could we expect that the dollar will be? That the dollar will be, if it goes lower than the forecast? Down, exactly. Thank you, John. So we understand the logic here. It's really I don't want to say easy, but it's logic. It's simple to understand. If the result is better, now don't get me wrong. Some things are, let's say the inflation rate is an example. It's not, if the number is higher, it's not always positive. If the result is higher than before, it's not always positive, because if I measure the inflation rate and the inflation rate is higher than before, it's a problem. It's not good for the dollar. No, it means that we're heading downwards to more inflation, right? Yeah, same apply with the interest rate. It doesn't necessarily mean if they increase the interest rate, is it good for the economy? No, because people can barely handle the previous raise, so maybe it will create more difficulties. So there is a certain level that we can't exceed, right? That the government, okay, but never mind. We're not going to go into that. The point here, for the sake of the discussion, is you got to make a difference between a positive decision by its nature. So that means creating more jobs is a positive decision. So obviously, if the number is higher, it can contribute to the dollar. An inflation rate, which is, I don't want to say a negative decision, but if the number is higher, that means that it's, well, negative. Okay, because it's measuring the, never mind. Okay. Is that understood? Do we have any questions about that? What I've explained just now? Okay, so fundamental occurrences affect the market negatively or positively based on the previous, and not only the previous, actually the forecast. So based on the previous forecast and actual result. And can be interpreted, right? Depending on the relevancy of the asset related. That means I'm looking at the decision about the, well, the oil is quite simple. If I'm looking at the oil inventory, obviously it can have impact on the oil. But I want to try and give you an example about something that has different relevancy, not just currencies. Let's take commodities as an example, right, guys? Let's take what we've been looking at, right? Wheat. So this can be also affected by a war or something. How exactly wheat or corn or some other commodity can be affected by something related to national security? The reason is because of transportation and agreements. If the transportation routes is changing or agreements are changing or tax that the country is paying is changing, that will have a direct impact on commodities. It will have a side effect and it will have a direct impact, right? If it takes longer to transport, let's see how much time we have because I don't want to, but I hope it makes sense. I hope that what I'm saying makes sense and not confusing you. But I think, unfortunately, I think we have to carry on for now. How many assets should I trade at the same time? Ooh, I just love those kind of questions. So guys, let's be honest about it. How many assets should I trade at the same time? Let's say one asset. This is also the question here is with how many should I diversify, right? Maybe a question mark. So one asset, let's say two assets, maybe three, let's say 5 assets, 10 assets, or more. Okay. What would you recommend for maybe yourself or your friend? What would you recommend to trade only, again, at the same time? At the same time, I can trade maybe 100 assets, but one by one. The question here is that parallel at the same time, how many assets should I trade? Let's begin with what the calculations are. Okay, how many? If I'll trade 10 assets, what's the difference between 10 assets versus one asset? Okay, can anybody tell me? Can anybody tell me why would I trade one asset versus 10 assets? Any idea, guys? Not putting the eggs in one basket. Okay, that's good. Not putting the eggs in one basket. But why would I trade 10 assets or why would I trade one asset? What is the differences? Let's go with something very basic. What do I need more time for? What requires more time? One asset or 10 assets? Right? So one of the things is what requires more time. If I need one asset to trade, let's suppose I have a position with, God knows, let's say one of the stocks. Okay, and I carry the position for a month. Okay, and I have this 10 assets. Let's suppose I go with 10 assets. Okay, with, again, stocks and carry the positions for a month. Now, in this case, this is, by the way, when you're holding a position for a month, you're already in the categories of swing. We have 3 trading styles. We have many more, but those are the main ones, right? Scalping, intraday, and weekly, and we have swing. Now, when I'm scalping, Okay, so the idea with scalping is buying and selling quickly. That means that I can end up having 20 positions a day, just buy, sell, buy, sell, buy, sell. It's a common thing to trade small time frames like a minute, 5 minutes, 15 minutes, and so on. And the potential gain can be very high. You can make a lot of money with it, but again, the exposure is equivalent. So scalping is fast-paced trading, and it's commonly diversified. Now, on weekly and swing, there is no obligation for me to trade more than a single asset. I can just hold a position with the stock that I like, or a commodity, or something else that I want, currency, or whatever I want, and just to hold it. There is no obligation on my end as a trader to take more than a single asset. But why? What reason should I have to trade more than a single asset? Let's wipe out all of those and type down the real explanation. So one of the reasons why should I trade more than a single asset? One, it is not sure I will make profit on that asset, right? So let's suppose I took a position with wheat or gold or whatever I wanted, one of the stocks, okay, and I took a buy. Let's say I have a buy with wheat. Okay, I have a buy with wheat from, let's say a month ago. Not making profits. Okay. Now, in this case, as long as my asset is not going to turn around, let's suppose that I took a buy and again it went against me. Okay. Now, if I'm going to take another buy, what can be the result? I'll either lose more or the market can turn around. But at the same time, if I'll take another asset, let's say like Amazon as an example, or corn or anything else. In other words, when I diversify, I split my risk. Okay, so some I can lose with wheat and I can gain with wheat. And if I have corn running in the background, perhaps I can compensate my losses, or I can compound additional profits. That's also one of the reasons. So it's not sure that I'll make profit on the asset. It's one of the reasons. So to diversify, increase profit or loss on the asset, right? And when I diversify, it allows me to enjoy more variety of fluctuations. Wheat moving this way, corn moving another way, and maybe I'm losing money with wheat and I can gain with corn, or maybe I can gain with both, or God forbid, lose with both. But the idea is that I'm not depending only on wheat. I'm not depending only on a single asset. I diversify, I expand my portfolio. Okay, now again, there is no obligation. There is no obligation. It's not mandatory. It's not, I can say that it's not even required, but there is a reason for people to do that. Okay, there is a reason for people like Kim wrote here, not to put the basket in one egg. There is a reason for that. Okay, now the question is, how many assets should I trade at the same time? Now, we obviously understand that there is a difference between 1 to 2 or 5 or 10, but the question is, how many should we have though? Can we have 20 at the same time? No, that depends on several things, depending on time, money or margin, we can also call it margin, depending on exposure. Remember, when I'm taking a position with wheat, let's suppose that it does make profit. Let's suppose that we are with the sell, okay? And I want to take another position with corn, okay? And I'm making money with corn as well. Let's open up corn as well. Right? Now let's suppose that I have a position with wheat, I have a position with corn. Very well. But I need to remember that I need margin for that, and I need to remember that I'm also exposed on both of the positions, which I need to consider if it's part of my strategy. So it depending on the time, depending on the money, depending on the exposure, and also experience. Okay, guys, I'm sorry. It seems like my sound just went off. Sorry. All right. I'm gonna take the. I hope that everybody hearing me now. I don't know what caused it to happen when it just happened for some reason. We're gonna paste the answer down here. Okay. And we are going to carry on with the can I trade without leverage? Okay, so guys, how exactly can I trade without leverage? First of all, can I trade without leverage? The answer is no. You can trade without depending on leverage. You cannot trade without leverage. Okay, as in this is CFDs. CFDs is contract for difference. It's a known thing that the leverage here is built in. Okay, in this case with wheat, the leverage is 1 to 10. How exactly can I trade without depending on leverage? So this is very simple. 1 bushel of wheat cost $579. Okay, we're gonna multiply that by let's go with 1 maybe. 1 lot is 100. I want a number that will be difficult to, not difficult, but challenging to. Okay, let's try 0.05. No. Okay. This leverage is 1 to 10 and make things very easy for us. And I want to pick something that will be a little different. That's more like it. So let's take gold. And let's go with 5 ounces. Okay. Yeah, so this exercise is super simple. We're going to take the price per unit, which is 2015. We're going to multiply that by 5. And the value is 10,079. Let's understand what happened here. So price per unit is 2015 units, or quantities is 5, value is 10,000, right? Okay. Now we have something called leverage. The leverage is 1 to 10. Sorry, the leverage is 1 to 20. Okay, leverage, what it does is it multiplies buying and selling, right? Very simple. And the last thing that we are going to look at is called the margin impact or margin requirement. Okay. And it's based on the leverage. It's based on the leverage. Therefore, this is what I need. Okay, if I wouldn't have leverage, this is what I would have needed, which naturally I can't even open it because I don't have enough money, right? But thanks to the leverage, which logically multiplies my ability by 20, I can simply divide this by 20 and I have how much I need. Okay, so that will be 500 bucks compared to 10,000. Now, how can I trade not depending on leverage? Who can tell me? Okay, so this is quite simple, right? Are there any questions though? Any questions regarding what I've showed now? Or before? I don't know. I don't remember if I stopped to ask before the last question, the previous questions. But do we have any questions so far? Any questions, guys? Kate, you're asking if the account manager costs money? Okay, just a second. I didn't write it. Oh, something. Did something happen to my screen, guys? I think that something happened to my screen. I'm sorry, just a second. What did I do? Well, I hope that it's back now. Is my screen back, guys? Honestly, where can we see this PowerPoint presentation slides? You promised to send it to our class. It's not only I'm afraid that I'm not able to send you this, but as I said before, it's recorded anyway. So just go to the YouTube and see it on YouTube. Whatever I'm showing you now, you can just stop the video and look at the screen, right? You can go back to what I've explained and watch it as many times as you need to understand. That's the purpose of why we're recording the webinars. We don't expect the audience to understand things right away. It's not the point. The point is to give you the content, and later on you can see it whenever you want. In your own on YouTube, you can also change the speed, and you can have it translated. It's very nice. You should try it. But unfortunately, no, I can't send you the presentation. There is nothing special here to send. Look, this is the questions. This is the agenda. Down here, I'm gonna send it to you. Actually, I'm gonna send it to you now. Thank you, Oli, for reminding me. Very nice of you. Okay, so I'm gonna send it to you now. Thanks to Oli to reminding me. And that I'm gonna do that through the chat, guys. What is the YouTube channel? Just search AvaTrade. Search AvaTrade, and you're supposed to see that. But go with the AvaTrade with the blue icon, not anything else. All right. So obviously, it's written here what each of those things are. Okay. But I'm gonna tell you something very nice. You see that right here. Right here, there is also the tutorials button. So you don't have to go through the link there, and okay, you don't have to do any of those hassles. You're just gonna go down here. You see this icon, YouTube icon here. You're just gonna click on tutorials, and it's gonna open very nicely the whole folder. Okay, you can just scroll down, find whatever you want, and the videos are already here. I have a feeling that if I'll click here, it will send me to YouTube. Okay, so it might be only this might be good for you because you asked about the channel. I think this one leads us to the channel, right? Let's try that. Yeah, well, no, unfortunately, it leads me to somewhere else. But I think if you click here, never mind. I guess you guys can find your ways. I'm not such a technological genius. Okay, but I guess to get on YouTube and do it shouldn't really be difficult. Where was I with the questions? Who asked me about the account manager? Oh, Kate, I'm sorry, Kate. You asked about the account manager, if it costs money or not. And I don't know if I've mentioned it or not, but it doesn't cost money, okay? It doesn't cost money, but it requires you to make a deposit and get moving. And then we can assign a senior account manager. Now, if your account manager doesn't contact you for some reason, you can just go to the live chat, which can be found here at the left bottom corner, left bottom corner, and through the chat you can ask a senior account manager. Okay, which should be fine. Where was I with the leverage? Oh yeah, so to trade without depending on leverage is simply to fulfill the value without the leverage, right? Again, you cannot eliminate the leverage. There is no ability for you to trade without the leverage, but you can trade without depending on the leverage. So let me draw that another picture here. Let's suppose that my balance would have been, oh, actually, you know what? Let me make it a little easier. If I have 1 ounce, am I depending on leverage here? No. Why? Because I already have the 2,000 quid. I have more than that in my account. So even without the leverage, I could have this position anyway. Yeah. So that's how you trade without depending on leverage. To trade without leverage, no. Okay. You can send your account manager that you want to adjust the leverage, maybe a little higher, a little lower. That depends on the regulations, what we can or what we can't. But to trade without leverage, as far as I'm concerned, it's not doable, but you can trade without depending on leverage, okay, which is very much presented down here. Okay, all right, okay. Can I trade without leverage? No, but you can trade wisely without depending on leverage. Execute, and stay in the positions by the necessary margin without leverage. In other words, if I take a position that's worth $2,000 and I have $2,000 in my account, I'm trading with leverage, but I'm not depending on the leverage. Okay, you can do that. It's up to you. It depends how you strategize and how you trade. Now, guys, as a nice benefit to whoever survived till now, I'm going to give you this nice special promotion code. So as related to the account manager, this is something you might want to give to your account manager to enjoy a one-on-one premium market review with your account manager. Okay, so I'm gonna paste it in the chat. I'm gonna give you guys in the remaining 2 minutes. I want you, if you have any more questions, you can ask me. I hope that I have enough time to answer because again, in a minute we have to say goodbye. Anything else, guys? Anything really? Any questions? Anything even about what I've explained? What about what I said or I didn't say? Anything else that you would like to share with me? On YouTube. On YouTube, as I said, it will be on YouTube, and you can watch it later on. Okay, guys. Thank you for coming and joining us today. It's been a pleasure. I wish you all a fruitful week. I hope that you'll make a lot of profits, and I also hope that somebody beside Kate learned anything else from my at least one thing from this webinar. And that's it. So you have a good day and best of luck.